Hi everybody, it's Chris here from Strand Education. Just going to be looking at the Canadian crosses for today. Reason being, we have a lot of data this afternoon out for the Canadian market. End of week, but yeah, this is all in GMT by the way. But you'll see that we have core CPI inflation results month on month, year on year. We also have retail sales figures for the month of Jan, also CPI, yeah. But you can clearly see that Canadian dollar, we have a lot of news out this afternoon for this particular one. So if you're looking for any opportunities, then obviously you would look at the market data, and that would be some sort of indication where you should be looking to look for opportunities, let's put it that way. So lots of data out for CAD, so therefore it would only make sense if you start looking at Canadian crosses. Canadian dollar is risk appetite, it's a commodity pair. Therefore there's risk appetite linked to it, and if we're seeing commodity Canadian dollar, then what we could do is look at commodity strength. Then you look at for negativity against risk averse, so yen or safety, yen or Swiss franc. So hence the reason why I've got CAD yen and CAD Swiss franc on board. So let's start with the US dollar CAD on the monthly. Always start with the bigger time frames. You can see clearly back in January of this year we had a massive shooting star formation, and a shooting star clearly indicates end of uptrend, in this case a bias uptrend, and hence the reason why we've seen negativity playing out for the last 2 months. This month in fact taking more momentum, and also well, clearly as we've seen price falling. No interest rate hike for the Fed this week passed, so further negativity pressed on the US dollar. There was mention that we were going to see further interest rate hikes throughout the 2016. That's failed to materialize as we've seen further negativity or indecisiveness within the global economy since January. China has offset that purely because we saw some negative data coming out of their stock market closing twice on 2 occasions through January and February, which led to a lot of uncertainty in the global market, and that indeed has played out. So clearly you can see the indicator box of here predominantly negative, but you can see that the monthly is still pretty much to the upside. Having said that, this shooting star or this evening star formation, you take on the bull candle followed by the shooting star followed by a bear candle, clearly cementing a change in market sentiment, i.e. no more bulls to the upside, more likely to see pullbacks. And if I just pan out, Jay, you can see that price is now pulling back to a major support and resistance level that goes back to 2003. So 2003 support, 2005 resistance, 2008, 2009 resistance yet again, 2015 resistance, then the breakout towards the end of last year, then the support and the continuation to the upside. And that's pretty much come unstuck at a major support and resistance here as well, just recently in 2016. Started 2016, apologies. So now we're seeing a pullback to these levels. So we've got to be well aware that the long-term bias, people will potentially start looking to take profit and in and around this area. Why? Because if you're looking to short or sell, in this case, an example, after this negative setup over here, then you're likely to take profit at your first potential target. And the first potential target is this one over here, clearly stated, a very, very pronounced long-term support and resistance level. Okay, so when we drop down to the weekly, you can clearly see that the support and resistance through 2015 becomes very much apparent, and you can see now that we've seen a lot of selling. Tweeze the top, another indicating of selling, which made up that long wick bias on the shooting star that we saw in the monthly. So tweeze the top, also a negative signal that there's no more bulls in the market, and therefore we're looking for selling bias. And you can see consecutive 1, 2, 3, 4, 5, 6, 7, 8th, going into our 8th week of clear selling, just short of 1,000 pips since the creation of this top over here that we saw at the start of the year. So what it's done is it's taken us most importantly below the 20 period moving average, but is also seeing price right now on this weekly candle trading below the 50 period moving average. Now if you look at overall market sentiment, if you look at currency pairs, you'll notice that some of them use both moving averages as support and resistance levels, and clearly this is no different. You can see here, if I just pan out, that the 50 period moving average has acted as a really strong support of price. So now that's quite interesting, because if I look at market data that's expected out today, we're looking at CAD data. Okay, you can see core CPI month on month and year on year. Look at the previous figure and look what they're expecting. So here, the month on month figure for February, you can see that the previous one in January was 0.3 and expecting expecting an increase of 0.2% to the upside. The CPI inflation year-on-year figure, however, is no change. Now what we can do is we can just go into see further data just to see what the previous outcome has, and you can see the graph in itself pretty much flattened at 2.25%. Okay, inflation, very, very important. That really plays its part in overall decisions by the banking institutions, in this case the Bank of Canada, in terms of interest rate hikes, etc., for the long term. And if you just look at the overall bias here, you can see that price is pretty much, the inflation figure has pretty much come unstuck at 2%, and we've seen it actually dropping recently since mid-2015 onwards, so not really all that great. Ideally, we'd like to see that strengthening. We've seen 2 consecutive months now where we have seen it strengthening, so as long as it's not falling, it's good. So yeah, look for positive. That would be a positive sign if indeed we did get that coming out at 2%. If it drops below the 1.9, then something to worry about. But you can see the month on month for the same time clearly moving to the upside. Then you look at core retail sales monthly figures coming from a negative bias to a positive bias. So the forecast for CAD is strength. Okay, overall there's strength. So it depends how strong it is. Is either going to come out as expected? So it's moving, but not really all that great, or it's moving and it's far better than the forecast, and that's great. But now when I bring it back down to the chart, then that would have an impact on the US dollar CAD. Why? Because we've seen the US dollar falling against the Canadian dollar. So now if we see stronger Canadian dollar figures coming out, that would have a negative impact on the US dollar. That would mean, i.e., further negative selling bias on the US dollar against the CAD. The other scenario is if the data comes out this afternoon and it's not great for the Canadian market, then what we could be seeing is, if we go back to the chart again, is we could be seeing price actually consolidating or stopping, okay, at this level. So that would make sense because we clearly are trading into a major support and resistance level. And that support and resistance level is a level that are placed on the chart just by looking at my monthly time frame. So clearly hesitation could be expected. It depends there again on the outcome of the data this afternoon. It's just one of many things that could happen this full month. But just giving you a bias of just looking to tap into overall opportunities intraday. So daily, there again, you can look down. Now you can see that daily, the intermediate trend is clearly to the downside. We've not seen any swing highs recently. We're trading below the institution. And if I just pan out here, you can see on the daily that price has pretty much been trading above the institution since the best part of the early parts of 2014. So by price trading below the 200 period moving average at this time around is not a good indication. You can see before we saw the actual setup, the FX8 setup, actually turning negative bias, but we're still trading above the institution. So the underlying sentiment is you're still selling in what is still very much a positive uptrend. There again, we've seen 1, 2, 3 occasions where the candlesticks actually changed color, but we're still trading above the institution. This time around, you can see we're trading below the institution. Okay, that's not a good sign because that tells us that there's genuine negative sentiment. So here again, just zoom in, you can see that my turquoise line represents that long-term monthly support and resistance level. You can see that the last 2 days, in fact, we've seen a nice bearish engulfing candle, therefore US negativity, and you should ideally be either in trades or in this particular one already because of the nice bearish engulfing candle that actually happened on Wednesday. So opportunity on Wednesday, and subsequently we've seen market falling. So are we going to see a continuation of that, i.e. stronger CAD data would have a negative impact on the US dollar and push it lower? Just be aware that we're trading into a major support and resistance level, so we could see some consolidation in and around here. So that's all I'm doing. I'm just pointing out an opportunities on the charts for currency pairs that are expecting data for that particular time frame. So the bias as it stands now on the daily is for further negativity. Just got to be well aware that we are trading into this level, and it depends on the market data that comes out today. It's either going to be positive or pro-CAD, which is going to put further weakness to the US dollar to the downside, or it's going to be pro-US dollar because of the Canadian data comes out negative or worse than forecast, and therefore we'd see the US dollar pull back. And that would make sense because we're trading in and around this area. So just be patient. CAD yen, there we go. Now CAD yen, very, very important, because CAD, as we know, is a commodity producing nation. It relies heavily on commodity prices to dictate its overall bias in the market. So clearly we've seen weaker oil figures, so due to inflation, etc., that's not really helped as much, and that's had an impact on the Canadian market. We've seen interest rate drops recently to try and stimulate the economy, and what it's seen is we've seen investors moving to safety, so CAD, selling CAD and moving to the yen for better opportunities. And clearly we've seen that over the months. You can see here on the monthly chart we've seen negativity. The candlestick last month turning red for the first time. Not a really good sign. You can see the overall upside trend over here. If you take the bias, take the swings, you can see clearly that we've had swing high, and the 50 period moving average was the prior swing high. We saw a breach, bearish engulfing candle move lower, and that subsequently saw the outcome, which was this negative sentiment selling into the start of the year. We saw some pullbacks, however, price failed to actually hang on to those levels. So clearly just a pullback before we saw further selling sentiment coming through last month, and subsequently we saw pullbacks towards the end of the month of last. So what we're seeing clearly now is the long-term bias of here on the Canadian against the yen is negativity. A lot of positive movement in the intraday time frames. A lot of indecisiveness coming in on the weekly and daily, as you can clearly see, because now the R squared, which is part of the FXA template, is telling us that there's no genuine selling or no genuine sentiment at the moment. Daily we want those indicators to be bright blue, and then look for the indicators to tell us which direction. Is it genuine sentiment negative or genuine sentiment positive? Clearly we haven't seen any lows. So selling last month, but we haven't seen a continuation of that selling sentiment going into this month, i.e. we would like to have seen the first couple of weeks of this month trading lower than last month's close, but that's failed to materialize. And ideally our target would have been the lows that we saw in January or February, and that's clearly not happened. So the objective straight away, if I drop down to the weekly, is we've not seen a continuation of that. So now we're going into the third week of this month, and you can clearly see that we haven't seen any new lows, and that's a concern, because now our OSMA, or the MACD, is now crossed, because ideally if we are looking for selling sentiment, okay, because if it's a weak currency, which is a commodity prices, then you would have seen that investors moving to the yen for safety. We've seen that happening. However, recently you can see that price is now trading within a consolidated range. We're now testing the 20 period moving average, and I mentioned that certain pairs, you'll notice that the moving averages act as support and resistance. Clearly here, for this particular pair, the 20 period moving average has done a great job at actually either supporting price or resisting price. In this case, it's been resisting price. So what we've seen at the end of last week is a potential hangman. Okay, this hangman's taking place now at a major support and resistance, which is the 2015 high and the 2016 high and the 2015 low. So the start of the year we saw further selling, then we see a correction, and our price is moving within this range. So here there's a potential for a hangman, but a hangman ideally is when you're seeing the actual high being created on the candle, but it's still trading below the prior low. Something like that. That's a hangman. Okay, so it's not made a new high, a similar candle, but it hasn't closed higher than the prior candle, and that's important. A genuine hangman would need to signify that there's clearly a lot of selling and no direction to the top side. And subsequently, what we want to see now is this one's moved higher again. So ideally, we're seeing bullish bias to the upside, and that is what we're looking for now intraday when we look at opportunities to trade. This week, we've clearly not seen any new highs, and they're not seeing any new bullish bias to the upside because price is trading, as I mentioned to you, on that weekly support and resistance line that I just drew just recently. So clearly here, CAD Yen, CAD data this afternoon, there again, as I mentioned to you, if CAD comes out and the data is positive, then we could see CAD rating high again, and subsequently what we could do then is, if we see a break high, is we could target the institution on the daily very aggressively to the upside. We do have everything in our favor. Blue arrow, blue candles. The only thing we don't have in our favor is the OSIMA. The OSIMA clearly is flat, okay, and we trade trends. Price hasn't been trending recently. The last week or so, it's actually been trading sideways. So here we just got to be vigilant and wait for a breakout, genuine breakout. Will we get it this afternoon with the CAD data that's going to present itself? That remains to be seen. So yesterday's candle is showing a hangman. Okay, remember, you can see this, and it's happening in a major support and resistance. So if that's a genuine hangman candlestick formation, this one over here, then we need to see CAD negative data, which would then see selling to complement it, and this could ideally telling us that we're not going to see any new highs, and then what we could see is price falling back to the downside again, and could potentially be looking at prices reattempting the January lows again. But that remains to be seen depending on the news that comes out this afternoon. CAD Swiss franc, there again, another safe haven. Okay, you can see CAD Swiss franc, we've not seen any new lows for God knows how long. I mean, this goes back to the start of 2015. Trading at support, we saw hammers, and we've seen corrections over the last couple of months. So not a really good one at the moment now. You can see that the monthly and weekly are not falling with each other in an agreement. You can see that there's no clear red and the R squared complement, but there's no clear red and R squared complement again yet on the weekly, because it's totally all over the place. And that's not a good sign. Here when we drop down to the weekly, you can clearly see how it's not really doing us any favors. We saw last week closing with an indecision candle, a spinning top. Having said that, it's now trading above the 20 and 50. But if that was to be genuine bullish sentiment to the upside, we'd have liked to see the candlestick change color. Notice the RMO is still trading below the zero, and as long as the RMO is below the zero, then clearly don't have any bullish bias in this case, and it's still negative. So here again, ideally like to see this week closing with a bullish engulfing candle. Ideally especially after an indecision candle, as long as it's trading above the 20 and 50, the underlying bias is still favoring to the upside. But you can clearly see that we're in a downtrend. Okay, so that's important. So this one over here, not as great in terms of market liquidity, but here again, depending on what happens today, could give us a bias of what we should be looking for to trade going into the new week, next week, in terms of our direction and opportunities. So here again, just be patient, wait for something to happen, and yeah, trade it when it becomes applicable. You can see on the daily here, for example, everything's red. Okay, so we got linear regression, the MACD, which is a trend related. When you need that to be strong, that's clearly not working at the moment now. So we've got a red arrow, the RMO is above, things just not working out at the moment. So here again, let's see what happens this afternoon. Let's see if we get a directional candle move that's going to implement things. So yeah, weekly, not good. So need direction. Let's see if the CAD data this afternoon give us some sort of direction for the new week ahead. I hope that's helped, and yeah, look to see you guys, and most importantly, you guys trade serenely.